Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, June 19th, 2013. Well, a continuation of the trend to the upside today. If we look at this current candle that has finished developing, this black body candle, not the final candle on the chart which is still developing, technically we haven't had a change of trend. It is a very, very bearish candle, an extremely bearish candle, but technically we haven't had the market put in place a lower high and a lower low, and prior to that we had the market making a higher high and a higher low, so technically that trend is still up. Now that doesn't mean that the market is not bearish. A very, very bearish black body candle suggesting that the sellers have made a very, very significant amount of net bearish progress on the day between the open and the close, and suggesting that this market may have found some momentum to test down to lower levels. Now we do have very strong support within this highlighted yellow zone though. Previously it acted as resistance, and then here we saw the market being rejected from there, and then after the market was able to rally through there, the area acted as support with these three candles here where we saw strong upside price rejection. Today we've seen the market close within the area, and we've tested just down to the bottom of that area around 132.50, and it is a crucial area. If we do see the market break out and close down below there in a bearish manner, we could see the market testing down to the 131.96 level, or basically 132. So we should see some solid support coming in around that area, but crucial to this market is how it reacts to around the bottom of this zone around 132.50. In terms of the candle as well, we have seen the sellers take control of the market, whereas we previously had the buyers in control, and the sellers have taken control, and a fairly strong amount of control. They have to close between the midpoint level and the low, but a fair way below the midpoint level, so suggesting that the sellers are strongly in control. And we did see them lose commitment as the sellers traded down below the Tenkan Sen, the green line here, and the Tenkan Sen is held as support for this market at the moment as this current candle is developing. It's not, but that candle hasn't finished, so there is potential for the market to bounce off this level, so we do need to watch that. If the market is going to rally, potentially strong resistance at 133.20 now, so we do need to watch that. If we do see bullish activity up above there, the market could quickly once again trade back up to 134. Now, also the significant thing about this black body candle is that if we look at the extent of the size of the body, in one day, this black body candle has taken out 1, 2, 3, 4, 5 previous candles, and that is quite significant. And it does highlight that as the market was rallying through these 5 candles with these small body candles, that the market was just lacking the momentum to trade up through that 134 area, and then we've seen the sellers come in quite strongly, and it is a reaction to this loss of momentum by the buyers, or the momentum that they had previously in rallying the market through this highlighted zone and then up above the cloud here previously. In terms of the candlestick patterns, this is a potential reversal pattern, and remembering that we don't technically have a change of trend in the market at the moment. It is a Tweezers Top Pattern, and here we have the prior uptrend, and here we have the two highs roughly around the 135 region, 134 region, just above there, and it does form something similar to a pair of tweezers, and what we're looking at is confirmation of that, and we would be looking for a candle with a lower high and a lower low. So if the market does continue trading from where it is developing at the moment and trade down through this highlighted zone, we could see establishment of that first time frame downtrend. Now, in terms of the Fibonacci Extension, and we're examining the relationship of this current first time frame uptrend that the market's in, remembering that the trend hasn't technically changed, comparing that to the previous first time frame uptrend, and here we see strong rejection from the 50% level. And for the previous day's trading, we saw that rejection from there. The buyers had control of the market, but the worrying factor there were the small bodied candles, and it did suggest that the buyers had may not have had enough momentum to trade up through that area. Today we're seeing strong rejection. It does set the market up for that change of trend, so let's watch for a lower high and a lower low. And in terms of the Fibonacci retracement, we were in an expansive mode of that. We tested 2 and just above the 161.8% level, and for today's trading we have been strongly rejected from there, suggesting that that has been an important and significant area, 133.84, and that there is potential for the market to establish a lower high and a lower low. In terms of Ichimoku, obviously still a bullish market in the long-term time frame. We had the market break out with this very solid bullish candle, and we are trading above the cloud, so a bullish market in that long-term time frame. So there is potential for the market to test back to lower levels, find support, and then bounce back to the upside and continue the trend back up on its way. The Kijun-sen here is below the price action, or the price action is above the Kijun-sen, giving us a bullish market in the medium-term time frame. But interestingly, looking at that Kijun-sen, it has turned flat, and price action has been attracted back towards there. So there is a possibility that we could see this market trend back down and trade down through this yellow zone. Technically, the market has closed just at the Tenkan-sen, the green line here, and that is significant. It tells us that we don't have any clear direction in that short-term time frame, that the market is neutral in that short-term time frame, and very often when we have upside momentum in a market, and if we look at the angle of the Tenkan-sen, the green line here, it has been pointing up very, very sharply, so we have very strong upside momentum in this market, and technically we tend to see very strong support around the Tenkan-sen as that first level of strong support where we have very solid upside momentum in the market. So there is a possibility that the market could bounce off this area, combined with the fact that this is an important zone of support now, this highlighted yellow zone. If we do see the market, as I've mentioned, trading up through the 133.20 level in a bullish manner, we could quickly see the market testing back up to the 134 area. So really, this market is bound by very strong resistance overhead, 133.20, solid support down below. We do need resolution either above the area of resistance or down below the support zone, and we need to react to how the market behaves with regard to those two areas.